So first question I have for you is, could you talk about the red flags when it comes to endorsement deals? Like what should athletes look for? Any key phrases that should alert them when they're looking at contract over?
There's several. And again, the endorsement opportunities for collegiate athletes, the legal concerns are a little bit unique and different than that of professional. So again, the NIL stuff is great. It's unfortunate that they kind of unfolded or released this whole new landscape without much guideline and for the players and their families. So to begin, I mean, one of the first things that comes into my mind are tax consequences. Most college players are claimed by their parents. Most college players are claimed by their parents on their parents' tax returns. Now, as the player, you're generating income. That income very likely, if your parents will try to continue to claim you, that income will be imputed or attributed to your parents, right? Your parents can't claim you and then you're claiming yourself, right?
Yeah.
On your tax returns. So you have to figure out how you're going to separate kind of that egg, right? Athletes want to be sure that with respect to taxes, that they're requesting 1099, Form 1099 from all the third-party providers with which they engage. As you know, there are two types of income, generally speaking, when it comes to tax code. It's W-2 income that an employee receives from his or her employer. That employer issues at the end of the year a W-2. You fill out your taxes on Form W-2, or on your income is reported on Form W-2. For independent contractors, self-employed individuals, your income is reported on Form 1099. For student athletes who are getting NIL opportunities, they will be deemed self-employed. They will be deemed independent contractors. So it is imperative that you are requesting Form 1099 from every company with which you engage. The IRS has a sports division. For years, they've targeted professional athletes. Unfortunately, they're a very easy target because most of them don't have traditional legal and traditional business representation. They have an agent, they have a marketing person and a financial planner, and they think they're covered, yet they're making multiple millions of dollars. So to not have sound tax planning, you're at a huge disadvantage vis-a-vis the Internal Revenue Code, which is why consequently 25% of the NFL is audited every year. And so you have to, the first thing I would tell players is this space creates a whole host of new tax consequences potentially for you and your family, particularly if your family is still claiming you on their returns. So that's one, IRS. Two, protecting yourself from personal liability. Anytime you're engaging in an activity that involves, say, fans or other people, and you're the celebrity endorser, you're the celebrity sponsor, right? So people are clamoring to get close to you. You're subjecting yourself to the potentiality of being held personally liable for what takes place in that space. We form companies primarily for two reasons. One, to take advantage of the Internal Revenue Code, but the other reason we form entities, we form businesses, is to shield our personal assets from the business of the company, to protect ourselves from the potentiality of personal liability. So these college athletes who become extremely popular because of their prowess on the field, the court, wherever it is taking place, the ice, and these deals start to
roll in,
come in at a significant clip. It is imperative that you think about creating a personal service company, a loan out company, and you then do the deals vis-a-vis your company as opposed to you personally. So company ABC wants to engage you to, promote their product or service, or to give it, wants you to do an appearance to promote their product or service, rather than you, Jane Doe, contracting to do that service. Jane Doe Enterprises is the other party to the contract, is the other party to the agreement. Jane Doe Enterprises then loans out your services as Jane Doe. Thus, the contract is between company A and company B and not player. And so if anything should happen, provided you're maintaining your corporate veil, meaning you're not commingling assets between your company and your personal, it's clearly discernible the difference between the player and the player's business. You should be able to shield yourself from the possibility of a personal lawsuit in the event that these things happen. yeah, everybody's excited about the ability to now monetize their name, image, and likeness. No one thinks about the possibility of being sued.
Yeah.
You're a celebrity athlete, whether at the collegiate level or the professional level. Newsflash, you're likely going to be sued, or you're going to have to initiate a lawsuit.
Mhm.
That's the curse that comes along with the blessing of being a celebrity.